Welcome to another session where we'll be looking at personal finance, shares, and dividends. This is presented by Accounting Lecture. Our aim is to get a better understanding of shares and dividends. Our objectives are shares and dividends over the period versus earnings per share, and EPS is earnings per share. And we're also going to be looking at shares and dividends growth rate over the period. And we're also going to be looking at examples of these principles. Now, what is dividends? The meaning of dividends is a slice of profit which shareholders get over the period. Okay, so if we were to have a profit, we divide it, and a slice of that profit is given to shareholders as dividends. Earnings per share, on the contrary, means the amount of profit which each individual share earns a shareholder. So the total profit, we divide it by the amount of shares, and that gives us the earnings per share. Shares and dividend growth rate over the period. Our dividend growth rate means the rate at which dividend grows over the period. Now, dividend could grow from 5% to 50% or higher, depending on the situation. Now let's have a look at this example, and it is important for us to go through this because a lot of the principles that we need in order for us to understand lies within this example. So let's look at this company. Let's call it company A, and it has 2019, 18, 17, and 16. So let's start in 2019. So in 2019 we see here our operating profit is 300,000. Our interest expense is 100,000. Our profit before tax is 200,000, and our tax is 20%, and which gives us 40,000, and therefore profit after tax is 160,000. So with that information, if we were to say we have shares of 100,000, our earnings per share is 160,000 divided by 100, and that would give us an earnings per share of $1.60. And then we have our dividends. Our dividend per share, if the shareholders decide that they will give dividend from the 160 earned of 50,000, then the earnings per share would be 50,000 divided by 100, and that would be $50, 50 cents. And so therefore that would give us a yield of 16.67. How we get a yield? It's 50 cents divided by $3, which is the share price. So $3 is the share price, and that share price, so again, let's go back. So 50 cents divided by $3 multiplied by 100 gives us 16.67. And then we have 2018. For our operating profit in 2018 is 500,000. Our interest is 100,000. That gives us profit before tax of 400,000. And we have tax of 80,000. That gives us profit after tax of 320. If we were to find the earnings per share, that would be 320 divided by 100, because the 100 shares, and that gives us $3.20. Now, if the shareholders or the board of directors decide that the shares declared would be, the dividend declared rather, is 120,000, therefore 120,000 divided by 100, that gives us $1.20. And so our yield is 30%. And how we work out our yield is $1.20 divided by 4 multiplied by 100, and that is 30%. Then if we look at 2017, we see there is profit after tax of 480. If the share price is now $7, now compared to the previous period, the share price was $4, it's now $7, so it has actually increased by $3 over the period. But let's look at our earnings per share. 480 is the profit for the period. If we divide it by the amount of shares of 100, that gives us $4.80. And the dividend is 2. If we were to if the shareholders were to, and the board of directors rather, comes together and decide that they'll give 200,000 to shareholders as dividend, then 200,000 divided by 100 gives us 2, and that gives us a dividend. Yeah, it gives us 2. If we were to look at the dividend yield now, it is $2 divided by 7, that multiplied by 100, and that gives us 28.57, which means that we have a situation here where our dividend is actually has dropped. The yield has dropped over the period by about 1.5, near thereabouts, over the period. Now let's look at 2016. If profit after tax is 560, and then we have the share price 5. Now the share price has fallen by $2, and if we were to consider the earnings per share, it's 560 divided by 100, and that gives $5.60. And then if we have our dividends of 250 divided by 100, that's $2.50. Now the dividend board of directors, as I said before, would decide, okay, of the 560, we'll just give 250,000 as dividend. And so our dividend per share is $2.50. Now 250 divided by $5 multiplied by 100 gives us 50%. So we see the yield year has increased to 50 significantly. And we need to also look at the fact that when the share price fall and the dividend has increased steadily over the period, the yield actually increases as well, and therefore that's good. That's very good for shareholders. Now, if you were to buy a share in 2017 for $7 and the share fall, so there's a drop in the value to $5, you would have lost, you would have lost value in terms of the share price. However, you would have recovered on the dividend front because you would get $2.50. So in real terms, you would have actually had an appreciation of 50 cents over the period in terms of adding the dividend that has been given over the period in relation to the drop in the share price. We have discussed and looked at the dividend in year 1, which is 50,000, and year 4 rather is 250,000. And if the amount of years is 4 years, we can consider and calculate the growth rate of 49.53%. So we can understand or look at the fact that this share has grown over the period by nearly 50%, which is very, very good. So in conclusion, we've looked at dividend and dividend over the period in terms of earnings per share. We said dividend per share is the dividend, the proportion of profits that the board of the directors decide that they're going to give to shareholders. That's the dividend. As compared to earnings per share is the total earnings divided by the amount of shares, and that gives us the earnings per share. We've also looked at the dividend growth rate over the period, and we consider the growth rate in terms of what dividend has been declared in year 1 compared to the dividend declared in year 4 in light of this particular example, and we calculate the growth rate, and in the example we had, growth rate was 50%, and we've applied the principles here in this example. I hope you learned something from this. Subscribe, share, and like, and leave comments below. Thank you.